The regular banking system that everybody's familiar with are the investment banks and commercial banks. They're regulated entities. They take deposits. The shadow banking system is a variety of entities, hedge funds being an example, money market funds being another, or entities like special investment vehicles, the SIVs, or special purpose entities. These are conduits through which money and liquidity flows. It comes out of the regular banking system and then detours out and goes into this shadow system. And it goes over there and does things. The real key to the shadow banking system is that it operates outside of regulatory oversight, and that means it has no limits on the amount of leverage that it can apply. Very, very popular vehicles during the expansionary phase of a credit bubble, because you can take money out, pop it over into the shadow banking system, lever it way up, and make a very good return on your equity. Shadow banking liabilities started to first exceed conventional liabilities back in '95. This was the period of time. '95 is when Greenspan did a couple of things. He took away, implemented something called the sweeps program, which allowed regular banks to sweep conventional deposits off of their books at 11:59 at night, take a snapshot, sweep them back on, and thereby avoid a lot of the reserve requirement ratios. So we had this extraordinary explosion that really, you can pin it right there at '95. It did a lot of things for us. It fostered an internet bubble and then helped support a housing bubble. And when the bubble burst in 2008, that game ended, and it didn't end with a thud. It ended with a complete crash. And so we had this extraordinary credit bubble going on, and a huge part of that was happening in the shadow banking system. The loss of that needs to be made up over here on the other side in the conventional banking system. But over there, we're not seeing the loaning. A little bit of loaning is going on, but for the most part, they have extraordinary excess reserves piled up. Banks aren't really loaning because the opportunities aren't really there. A lot of the corporations are able to tap ultra-generationally low interest rates over in the credit markets. So we're not really seeing the kind of expansion that the Federal Reserve not only was hoping to see, but we really need to see if we want to stop this deflationary impulse from continuing to do what it's doing in Europe and maybe visiting a country near you soon.